What's up, guys? So I want to discuss something real quick. I think I did a poor job of explaining this in the past because I was so enthused by kind of figuring this out. I just like rushed and just blurted it out whatever way. I've understood this for a couple years now, so I think I'm in a much better position to explain it. Okay, so I just watched this video with a guy named Ray Dalio. He's a billionaire guy. He's an investor, from what I understand. And I remember he made a video a while back. It was called like "How the Economic Machine Works." And a lot of people were watching that. I watched it. It explains a lot. I don't think it explains everything. Okay, but it was I think it was a good attempt to educate people. I think that's what he's trying to do. He seems like a good guy with good intent. So I just watched a video where he was being interviewed by somebody, and they asked him, straight up, like, what is money? Like, and they kind of asked the difference between money and credit. And he went in, kind of blurted out the traditional, oh, money is a storage of value, it's an intermediary of exchange, da-da-da. And I'm like, we heard that 1,000 times. It's not what he's asking. He's asking, like, I could see what the guy was kind of, saying. It's like, you can go Google what is money, and that's what you're going to bring up. So I want to get deeper because I already kind of figured this out, and I could explain how I figured this out. I don't even know if that's necessary. I actually just tried that, and it just was all confusing, so I don't even want to go there. But I will explain specifically what money is. So let's look at the world real quick. Let's just look at the world, okay? There are a bunch of different monies in the world. Every country seemingly has a different one. There's a history of money. There's been different ones all throughout history. You could just name a few, you know what I mean? We got US dollar right now. You got the, I don't know, we used to have gold, silver. You go back in super late history. It might not even be that late. I mean, it's relatively recent if you're talking in terms of cosmological, processes. But there used to be, I think, shells at some point were a type of money. There's been a lot of different monies, okay? That's the point I'm trying to get across. And with any of these monies, even today, there's a group of people that are willing to trade their goods and services, whatever they produce, for it, which is really what gives it its value. It's what people want to trade for. Because at the end of the day, in the economy, people want they want some good that they're going to use in their lives, whether it's for your luxury or for survival. You might specialize in whatever you do. You're a laborer or a producer of some good, whatever you do, and you're going to trade whatever your specialty is for money. So you can trade that money to get something that you're going to use in your life. At the end of the day, everything in the economy is trading to eventually, for people to eventually get end consumer goods that, really have value to them personally. So that's the only thing that really gives money its value, is what people are willing to trade for it. And that is kind of determined by how much somebody actually wants them. So, and then there's a supply and demand function of, how much of whatever good there might be. It's going to determine how much money somebody's willing to trade for it. But the real value of money comes from how much end consumer goods somebody's willing to trade for. And there's different prices of things in the economy. So you go look around, the prices change, and that is a function of supply and demand of both money and whatever specific good it is. So let's just say $1. Let's just say how much of anything you buy with $1. Okay, there can be a supply and a demand change of any given good. So the value of those goods relative to $1 might fluctuate, okay? But then there can be a supply change and a demand for the dollar, or supply and demand change for the dollar, and there can be a change of the value of the dollar relative to goods and services. And you have to understand how this goes. So let's just look at every transaction. Every transaction is, basically people making a deal. If you go to the store, that's where I was about to go right now, there's literally a price on every item, and it's basically an offer. And you don't have to buy it, it's just an offer. Some places you can literally see the price. You go up to the counter and be like, hey, I'll pay you this much for it. And they'll, it's haggling. So it's an offer. You don't have to buy it. If you don't like the price, go to another store. You know what I mean? If you accept that offer, boom, you just basically created a value of that money to whatever good it is that you bought ratio right there, at least in that locality. You know what I mean? If you look at the stock market, okay, people are constantly trading stocks. They're making deals, offering a certain amount of money for whatever given stock, and they literally chart it all day. You'll see like the value go up and down. What that's literally doing is tracking each transaction, every offer that is accepted, throughout the day. And you can see supply and demand of both the money. You probably won't see money because money is a more long-term thing. The value of money changes a lot slower than the value of a stock. Usually, like with the with the news of any given company, stock price might go up or down, and you can see real quick usually the demand change for well, you can see both actually on the stock market. You can see a demand change for the stock if there's like, let's say, bad news for the quarter, everybody sells. But when everybody sells, they put a lot more on the market, which is a supply change. So a supply increase with a demand decrease, value's gonna go down. If there's a good news for the quarter, or if there's like a good report for the quarter, demand will go back up. You see what I'm saying? And then the supply will be bought up and there'll be a lesser supply available. So the price is gonna go way back up. The offer's gonna be higher. So it's a relative value to money. That's key with money, is understanding relative value. And it's the same thing with every good or service in the economy. There's always changing prices. You go to one store, the same good is going to be offered at a different price, and then whatever you accept, you know what I mean, it's basically, giving the seller confidence that that's a good price to set it at. If nobody buys his goods at that price, you're probably going to lower prices later. And it's just, you'll see the price at a slower rate. If you graphed all the price of every single commodity, whatever, you probably see it, you can see it charted just like any stock on the stock market. And it might be a lower pace, it might be a lower change, So inflation, what is inflation? Inflation is a increase in the supply of money that is going to affect its value. So really, there's one really easy way to kind of look at this. It might not be totally accurate, but it's just a general easy way to do it. Any given money has a certain amount of people that use it as money, use it as the medium of exchange, And so there's like a certain amount of goods and services that those people are trading and using whatever given money to trade with, what I'm saying? There's a certain amount of people that are using that as money. That have a certain amount of goods they're trading with that money, And then you can take that amount of goods and services, basically, which will change. There's always a certain amount of, it's kind of like in the stock market, there's trade volume. It's the same thing in the economy. There's a certain amount of goods and services being traded in exchange for any given money. But you can take that, the ratio of goods and services to how much money there is, but also just how much money is being exchanged, trading hands. Because really, a lot of people can be holding on to savings, let's say, and there's only so much money floating around the economy. That's really all the supply that's available. So whatever the ratio is, it's like the trade volume, just like in the stock market. There's a trade volume of goods and services versus money, whatever given money it is. And with any given money, there's a certain amount of people that ratio is applicable for. You know what I mean? You're not gonna count people that are using some other money. So whatever given money it is, whoever the people are that are using it, they're trading a certain amount of goods and services. It's a fluctuating thing, just like on the stock market, trade volume, versus a certain amount of money being interchanged for it. And so there will be prices determined by that ratio. And that's, inflation, they try to say it's just the increase in prices. That's what traditional economists say. It's really an increase in the supply. And when you have an increase in the supply, you'll probably have an increase in the available supply. There's functions with that matter, but generally speaking, there'll be more money versus it's like a higher money to goods and services ratio, and that will actually be affected by if you just increase the supply, that ratio will cause the value of that money to go down kind of naturally, but then that makes it look like an unattractive thing to hold on to, an unattractive asset, which will decrease the demand for it. make people get rid of it and then increase the supply even more, and it kind of turns to this runaway thing. And that's happened in the past. People basically will drop any given currency and its value will just go to crap, you know what I mean, like literally almost zero. So kind of people will stop using it if its value is going down too much, if it's inflated too much. They'll quit trading the goods and services for it, which is the only thing that really gives it value. And eventually you'll just have a bunch of money floating around, nobody willing to trade anything for it, and so it's worthless. You know what I mean? That's what hyperinflation is right there. And there's plenty of currencies that's already happened to. There's stocks on the stock market that's happened to. There's like I say Enron. Enron's used to be here in Houston. That was a company that basically, it looked like a good company, and the stock price was going way up, but then it kind of got found out, and everybody's like, oh crap, it's not even doing what it was saying it was doing. And stock price plummeted, and it literally went down to zero. And somebody, as they call it in stock trading, they say that they were left holding the bag. So a lot of people who worked at Enron got a bunch of inside information, that let them know they should sell. So they sold to somebody, and somebody bought at a really high price right before the price went down. And then, they might have sold to somebody else, but either way, that stock was on decline the whole time. And, somebody bought it. Probably, let's say you bought it all the way at the top right before it went down. If you're hoping it went back up the whole time and just held on, it didn't go back up. It's at the end of the day, it's worthless paper, worthless ownership in that company, because the company is worthless. You know what I mean? It's found out to be a worthless company. So somebody bought probably at a high price while the value of it was going down, because nobody was trading money for it after that. And at the end of the day, they were left holding the bag. They were left holding a worthless slip of paper that said they owned a piece of a company that was worthless. The company died out, and they're left holding the bag. It's the same thing with a type of money. You might be holding on to like savings in a certain type of money. If they hyperinflated, everybody drops it, nobody wants to use that money anymore, and you still have like life savings in that, currency, whatever, then you're gonna be left holding the bag with that currency. So it's a supply and demand function. It's really simple, to be honest. And as you can see, I'm likening it to stock trading a lot. And the reason as I came to understand all this, because I started studying the cryptocurrencies, and I was actually going to invest in cryptocurrencies, and I didn't feel comfortable. I was looking everywhere on the internet, and nobody gave me like good advice. They kept just saying I was going to the moon, stuff like that. I'm like, how do we know? Like, nobody was giving me like real like functional advice to like understand what the price was going to do. So I just started through. I'm like, okay, so what's making the price go up? And that's when I understood it's just a supply and demand function. And I realized, well, okay, it's that's what it is. But then I was like, okay, so is this? And I looked at stocks, and I'm like, yeah, that's kind of what's happening with stocks too. But then I'm like, people are calling this a currency, so is that what's happening with money? And I'm like, yeah, sure enough, it is what's happening with money. And it's the same exact thing. There's supply and demand functions with everything in the economy. And it's most people think in terms of like, what's the price of something relative to like any given currency, okay? And people think of supply and... Sorry, my phone died. Had to go charge. I went on a whole shopping trip and everything. So, back to my point. People think in terms of, price, kind of determining the value of goods, okay? They think in terms of a relative value of goods to money, you know what I mean? And but the same thing is true the opposite way. Money has value relative to goods, and that's key to this whole thing about money. What else? So I guess the thing that I'm trying to point out is money is just another type of good. There's a supply of it, okay? There's a demand for it in the way of goods and services being offered for it, okay? It's really just deal making. That's the entire economy is just trading, okay? And with any transaction between money and good or service is just a deal. You can directly trade any good for any other good. The entire economy is trading. Money just happens to be another type of good that a lot of people are going to accept in exchange for what they have. And the reason they're going to accept that in exchange for what they have is because they're pretty sure somebody else is going to accept it in exchange for what they have. So you create something, you trade it for money, and you're pretty sure you can take that money and trade it for something else that you want. And so with any given money, there's a group of people, and you can actually look around the world with different monies, how many people use each type. And there's no universal money. With every type of money, there's a group of people that are willing. There's a group of people that are willing to trade what they have for it. And so yeah, you can look around. Like usually, like what it is right now, and this doesn't have to be this way, but what it is right now, usually like each country has money, but there's also like Bitcoin, and Bitcoin, certain people around the world will exchange what they have for it, and it's kind of interesting because Bitcoin came to have money because first it was used as an investment vehicle, and it was exchangeable for already existing money, and thus people came to say, okay, if I trade what I have for Bitcoin, I could just trade it into a dollar or something, and then go take that dollar and get what I want. So kind of with that interchangeability with money, through it being used as an investment vehicle, it kind of gained traction as a money itself, and people are willing now in a lot of places to trade what they have for it directly, and people can trade what they have for Bitcoin and trade Bitcoin for something else that they want. Right now the circle of people, the group of people that accept Bitcoin as a payment method, it's been growing. So, but it's not like necessarily universally accepted. See, I think there should be an open market of money, many types of money. Like if I'm doing business, like I'm gonna accept any type of money, because one way or another I can go exchange it for any other type. The only reason you need to exchange any type of money is if like somebody has something you want and they only accept a certain type. If everybody's accepting a bunch of different types of money, it's gonna be a free market. Just you'll accept Bitcoin, I'll accept gold, I'll accept silver, I'll accept a dollar, I accept some other currency. And you go to another person, they accept them all, you just trade whatever it is that you have for it. If not, you can go exchange those things. We got internet and stuff, and accounting mechanisms, the digital age, and you can just exchange your money, any type of money, real quick for another type, and whatever type the supplier of what you want accepts. So I think there should be an open market of money. I think that's the future. I think it's what it should have been for a long time. I think there's actually been kind of like money monopolies in certain places. A lot of people don't understand that, or haven't understood it. I think a lot of people have just been told, in this country this is money, in that country that's money. It's like anything could be money. It's just it's another type of good. You can trade your whatever it is you offer for anything and trade it to somebody else to get what you want. You don't even have to have money in between. You can trade whatever it is that you have to offer for whatever you want directly. You know what I mean? And like I said, money is it's a medium of exchange. I call it like an intermediary good, because you're trading what you have for it, and trading it to somebody else. It could be anything. You could do like bartering. Like my brother, I remember he like did this thing. They called it like trading up. He traded this for this, and then traded this for that, and this for that. Literally bartered his way from like, I think it was like a video game system all the way to a new car. And you could do that. Just trade up whatever you want. I mean, that's all the economy is. I guess an important principle just to consider and remember is that at the end of the day, what really has value is what people want for their lives. You know what I mean? Everything else on top of that is a means to an end, which is getting those things that people want, consumer goods. And there's people who don't produce anything in the economy. They just know how to trade this or trade that, and whatever. The real life force of the economy is the primary producers that are creating goods that people at the end of the day are going to consume. And money is just a means to an end. It's a product, it's a good, and its purpose, its function, whatever you want to call it, is, I guess, to hopefully be a stable intermediary good. You know what I mean? And if it's a free market of money, then you might see ones not doing a good job of like keeping the value regulated well and stuff like that. So you might, people might just quit using that and they'll have other options and use something else, It's very simple stuff. Money is just an intermediary good. That's all it is. It's very simple. So yeah, when old boy Ray Dalio, he says the same thing you see on Google. That's not a sufficient answer, I don't feel like. And I don't know. Like I said, I came to understand this through trading Bitcoin. I actually didn't even get into it. Actually, it spiked up, and it got to a point where I was like, I'm not even gonna invest. It got too high, and that's the reason I actually came to understand all this, because I wanted to figure out how Bitcoin's price was going up and down before I threw my money in there, and then I just kind of saw the versatility of it. It was called a cryptocurrency, so it's a type of money, but also it was a speculative instrument. So I'm like, well, so I kind of figured it out. Just really deeply thinking about it. Thinking about the function. If I'm an investor, just think about both sides, the supply and demand side of the cryptocurrency, and just understanding it's a simple stuff. There's supply, demand, supply changes with different things that happen with it, and demand goes up and down. You gotta think like, you just gotta put yourself in the shoes of an investor, and you can kind of see why the price of anything is going up or down. The price or the value, the relative value relative to goods and services. Why is the value of the dollar going up and down? It's a supply change in some cases. In some cases, it's the demand change. Some people might just drop it off. They say, I don't want to hold on to the dollar anymore. I don't want to do business in the dollar anymore. Maybe something new came out and they're all going to the new thing, and demand drops off. You know what I mean? It's kind of like a stock. Like, let's say a new company comes out. Everybody was invested in this company. Price of the stock was going up. New company comes out. Everybody's like, oh, screw that old thing, and the new thing's replacing it. You know what I mean? So you just got to put yourself in the shoes of investors, business people who are, participating in any type of business transaction, and then you'll very easily understand, the functions of the market. That's all you really got to do is just put yourself in the shoes of the people on any end of any given transaction, and just you can kind of see the market functions. It's really simple stuff. So with that being said, I hope that's sufficient to explain what money really kind of is. It can be literally anything, but there just has to be a group of people that one way or another come to accept it as money, as a medium of exchange. You know what I mean? Like I said, Bitcoin came to be that way. It's growing. It's a circle of people that accept it as money because it was speculated upon, and it's interchangeable for dollars. So there's a certain amount of safety with that, and I think that can be the case for a lot of different monies if people start creating them one way or another. And honestly, that's a very lucrative business. If you create like a cryptocurrency and create a whole bunch of them, and you have a whole bunch of them, it's kind of like an IPO with a stock. The company holds on to a lot, put out a little into the market, and people bid up the price. Now people are holding on to a bunch of that stock and sell it at whatever price it gets bid up to, and they can make a killing. It's the same with the ICO, the initial coin offering. If you create a cryptocurrency, which really is like a digital asset or something, and you offer it into the market, and you hold on to a lot of it, and people kind of bid up the price of the portion that you put out into the market, you can make a killing off of what you have left if the price goes high enough, if people adopt it, start using it as money. You can hold on. Sorry, I had to wait for the siren. They pulled up. I don't know what's happening, but what was I saying? Oh yeah, something similar can occur with basically anything really. But for instance, let's say gold. We used to be on the gold standard with money, right? And then we're taking off the gold standard. Might not be a good example because the value of the gold never really went down. But let's say it did. If it went down, then people could buy up that supply, and then if later on people went back onto the gold standard, they would have controlled the whole supply. Only a portion would have been available, And if people use it as money, the value of it relative to goods and services would have went way up. And then the people that, had the rest of the supply, they can make a killing off it, you know what I mean? And it's the same thing with, it could be that case with any type of cryptocurrency. It could be, that's what investors do with stocks, like if the price goes down, they're like, buy it up. If they expect the price to go back up eventually. So I think it's the same exact thing, same exact thing can happen with money. And I'm telling you, I learned this because I was gonna invest in cryptocurrency and I saw how it was being used. It was kind of like a stock, but then they're calling it a currency. And I'm like, oh, it could still be used as a currency. I'm like, it's the exact same thing, And then I just started to see like the whole dynamic. It is kind of the same thing, So yeah, thank you cryptocurrency for coming out, and I guess I got myself to thank for thinking this whole thing through. I'm telling you, I was on the internet like looking hard. I was listening to MSNBC business people talk about it. I remember Warren Buffett kept saying like, get away from Bitcoin because it's a bubble. I'm like, what's a bubble? I don't even know what that means. I understand what it means now. And I think he kind of understood. I think a lot of people understand this stuff intuitively, but they don't know how to get it out. You know what I mean? And like I said, I was going to put money in it, and I just didn't feel comfortable with it. And I said, I got to think this through before I throw money in there, And I took the time. And, like I said, put yourself in the shoes of investors, anybody in the market. You have to think of their psychology. What are they trying to accomplish? Are they using this as an investment vehicle? Are they consumers? You got to think of the type of demand there is. Then you got to understand, the function of supply and demand and how that's going to affect things. And it's pretty simple stuff, man. It's really not that hard. And that's how it usually is, before you understand it, you think it's like once it clicks, it's like super easy. Like, oh, duh, so it's pretty easy stuff. I just really want to explain. I think it's like some pretty basic education that people should have. And it's kind of my goal to kind of get people to understand this stuff. So, like democratically, we can make better decisions, for our economy, you know what I mean? So that's kind of my purpose with talking about all this stuff and making videos and discussing this subject. So hope you learned something. Hope you did. Hope you can use this. And, it's funny because, like, a lot of people, I guess the first people to come to understand this stuff best, they're probably going to be, in a position that's advantageous, if and when they start investing and stuff. And, sorry, hold up. Sorry about that. I guess that truck is kind of rough and rugged enough to set off an alarm. But, there's already people that understand this stuff, like I said, intuitively, and they're making a killing. You got Warren Buffett, people that understand these economic functions, can take advantage of them. And so the sooner you learn, the better. So if you're learning right now, I guess you could take advantage of it. My goal is really to have everybody understand this stuff. And, at some point, I just decided, I started like looking into this stuff. Like I said, I was going to invest in cryptocurrency. I Googled how to get rich. I Googled how do rich people get rich. I started reading books from rich people, At some point, hopefully that should click in people, You get tired of the same old hard labor job you've been doing. I think it's a pursuit of that type of knowledge that can be very helpful in life. And I'm hoping people eventually, that clicks for some people and they say, I want to learn how are these rich people getting rich, and then they'll pursue this type of knowledge. And like I said, the sooner you learn it, the better. And hopefully eventually everybody starts understanding this stuff, and we can make better economic decisions democratically and whatnot. And people understand like economic policies and monetary policy and stuff like that. It's to me, this is like fundamental education. The economy, it literally drives the human productivity. It's a big old machine, and it's very relevant. So that's why I talk about this stuff. So hopefully this spreads far and wide, and everybody at least gets the basics down, and we'll be in a better position to I guess, vote for people that are going to be in control of certain monetary policy and things like that. So that being said, I'm going to leave it at that. I thank you guys for listening. I'm out.